ratio, the swap ratio for Bank of Baroda, Dena Bank and Vijaya Bank is out. And let's take it across to Vivek for a detailed update, a detailed analysis of how exactly is it going to play out for all the three.
Well, it's India's second round of the big bank merger. It's India's second largest PSU bank that we're talking about at this point of time. Bank of Baroda is going to merge itself with Dena Bank as well as Vijaya Bank. All of this news was along expected lines, but the one thing that the market was looking at extremely closely was what you have on your screen and the merger ratio. So what, the number that came out yesterday, 1,000 shares of Dena Bank got you around 110, gets you around 110 shares of Bank of Baroda at yesterday's closing price, and Vijaya Bank again 1,000 shares of Vijaya Bank gets you almost 402 shares of Bank of Baroda. At this point of time, looking at the stock reaction today, it's a clear indication that it's a much better deal for the bigger bank, that is Bank of Baroda has got a better better deal. And if you're talking about both Vijaya Bank as well as Dena Bank, they appear to have got the raw end of the deal, and which is why the stock reaction today is quite justified. Now, if you're talking about it, the big per share, what is it that Vijaya Bank shareholders have got to lose according to yesterday's closing price? 3 rupees a share is what they are losing, and Dena Bank is losing close to 4.8 rupees a share. Now, looking at some of the key ratios, and again this is something that would have influenced the valuation. The capital ratio for Bank of Baroda quite strong at 12.13%, Vijaya Bank around 13.9%, and if you're talking about Dena Bank 10.6%. So all of this combined, if you're talking about the merged entity, a pretty good capital ratio of close to 12.2% is what you're looking at. And if you're talking about the net NPAs, Bank of Baroda, it's been a rejuvenated bank in the last 3 quarters post the management change. Bank of Baroda net NPA of close to 5.4%, Dena Bank quite weak 11%, and Vijaya Bank again 4.1%. So the merged entity is expected to have an NPA ratio of close to 5.7%, and again this is something that will impact the lending capability. What is it that the street is looking at? Street, while quite enthused, a lot of brokerages do cover Bank of Baroda. JP Morgan has maintained the neutral stance. What most of the brokerages are saying at this point of time is that it's a good move, it's positive, it's favorable in case of the merger ratio for Bank of Baroda, but still they are not very enthused. Not a lot of them have gone ahead and upgraded their prices. They are still waiting for the entire merger to complete. They are waiting for synergy benefits to kick in. They are waiting for all of the dead weight to get pulled out, and post which they will go ahead and review their target price as well as their rating.
Thanks, Vivek, for that detailed analysis of what's happening with the merger. BOB flat at this point of time, up 1%, and the others, of course, are adjusting to the changes that he said. Earlier in the day, we spoke to the management at Dena Bank on this merger. Let's listen in what they told us.
Dena Bank has a huge CASA base. So if this is coming to the amalgamated entity, so we'll have effect on the cost of funds. Cost of funds would go down. By how much, that we need to explore. That is one. Second, as the balance sheet becomes bigger and bigger, our appetite to take more large credit exposures would go up. Especially when the limitation comes from RBI guidelines next year onwards, our balance sheet size also is very important. So we can take a bigger share in the bigger corporate credit. So that is second aspect. And third, when we have the huge branch network next to State Bank of India, so our reach to the market would be much more, especially MSME segment. MSME segment is going to be the next big market opening up for the credit growth. So in that, this large bank with huge network, we will have huge reach and we will have a distinct advantage. And technology and HR, systems and procedures, our capability to invest more would increase. And bigger the size, growth would be bigger, profitability would be bigger, all synergies if they come into place, I think our profitability percentage would also go up.
Do you think that this merger marks the first step towards rationalization in the number of operating PSBs and the emergence of 4 to 5 large banks that can over time manage operations better?
This is the philosophy which is being debated for the last 2-3 years. So we need 3 or 4 major nationwide banks and maybe few smaller banks with regional approach. So I think the entire industry is moving in that direction. First was the State Bank of India, merger State Bank of India along with the associates, they have done that. And now this would be public sector space, this would be the first major experiment. So if this experiment succeeds, and if this really throws out all synergistic benefits, maybe this thinking can be further expanded and maybe further implementation may take place. Yes. Because this has been debated for the last 2-3 years. This has not just happened just like that. So after a lot of debate, this was initiated. So if this works, I think maybe industry will move in this direction.
Well, yes, that is the intent, rationalization of these operating PSBs. Many thanks for taking time out and giving us a view as to how you're looking at the overall merger dynamics. But we can see the implications being felt on the stock prices. That's a double-digit cut on Dena Bank. Ditto is the case with Vijaya Bank, and you've also got Bank of Baroda. That stock is holding out quite smartly in the green. Let's also hear out what experts have to say about this big bank merger. What is their perspective about this?
For Bank of Baroda, definitely the merger ratios are positive because the extent of dilution will be lesser. And for the combined entity, our senses earlier was that the book value would come to about 90 odd, which because of lesser dilution goes up to about 98 odd rupees. So from that perspective, I think, and since most of these PSUs trade at about one-time book value, so I think that is the kind of an incremental positive we see for Bank of Baroda. So we don't expect a structural outperformance from the stock, but definitely the merger ratios are good for Bob. Short term it could be positive, but I think it will still have a decent amount of hangover post because of this merger. I think so it will still take some time to sort of perform.
Let's listen in what some brokerages are talking about. So you have JP Morgan, which says they maintain their neutral. This is for Bank of Baroda. Target price is 100 rupees. Ratio elevates pricing concerns for the merger. Synergy benefits will play out after a while. Morgan Stanley, on the other hand, remains underweight post the swap ratio, says that merger will result into a 29% dilution for Bank of Baroda, and they continue to prefer the likes of ICICI Bank, Axis and SBI, where they see gradual pickup as far as pre-provisioning profits are concerned.
Those are some perspectives coming in from across the board, the management, the brokerages, and of course a lot of market experts and banking experts as well. With that, we'll slip into a short break. More lined up.